Hi, this is Zach here with the Bulletin Board Heroes here at Box Markets for Monday, the 6th of February. Starting off with the FTSE 100, which is down nearly 1% after the excitement of the end of the week and getting to just about a new record high. Well, actually, it was a new record high. The current situation is that we're looking for potential support around 77.30, which was the September resistance line projection. Below that, the worst case at the moment, 76.20 or so, which is the 50-day moving average. While we're above 77.30, still looking for an 8,000 plus target, perhaps as soon as the end of this month. On to the DAX, which is also peaked out near a resistance line, in this case the one from back in September around 15,500. We were looking for that, we got it. As far as support is concerned, down at 14,900 and then 14,700 at that October uptrend line. Still got the 50 and 200-day moving averages rising, so this may just be a bad Monday for the indices. Moving on to the Dow, and here we're in this sandwich between the 50-day line around 33,600 and the resistance line there from early part of last year, 34,300, waiting for an end-of-day close back above or below that little range. Below the 50-day moving average, risks down to 33,000 on the upside, above 34,300. Probably looking for 35,000 initially by the end of the month, and then higher at that August resistance line projection. But at the moment, that seems a long way away, and that congestion slightly ominous in terms of the price action. Moving on to Bitcoin, where we've been waiting for some weeks now for the market to deliver a 25,000 plus target. At the moment, it looks like it's going the other way. Support at 22,000, and then the 200-day moving average area at 20,000. Ideally, we don't really break much below 22,000 ahead of a potential move through 25 and up to the top of that broadening June triangle at 30,000, which admittedly seems to be a long, or feels like it's a long way away at the moment. On to the stocks, and not very rich pickings today with the FTSE down as it has been, but Avacta bounced off the floor of its gap to the upside, V-shaped bull flag, and we're looking for £2, especially if we can get an end-of-day close, a decent one above that old January peak at 167.5. £2 could be on the cards as soon as the end of this month. Moving on to Cyanconnode, where there's been a gap higher, and we already had our golden cross last month. Shares making good progress towards the top of that rising trend channel from October 2021, as high as 34 pence or 33 pence, and we could see that by the end of this month, while we hold above recent support around 21 pence. A lot of volume in DeepVerge last week, but a bit quiet now this week, but still the charting position is the same, i.e. we broke back above the old support there around 1.55, above that looking for 2 pence, maybe 2.05 pence by the end of, well, I suppose the end of next week. A couple of weeks is probably a decent time frame on that. If you're cautious, you'd wait for an end of day close through the 50-day moving average at 1.77 pence, which obviously the market is looking at quite sheepishly at the moment. Next situation is Empyrean, which has given us a rather weird chart, but we had that spike towards the top of the broadening triangle, just missed it at 1.75. Another go at the moment. We've gapped up today, which is encouraging, so above a penny, looking for a retest of 1.7 pence over the course of the next couple of weeks. Lots of new people coming into or being appointed to Greatland Gold at the moment. The other point to note is we've had basically a quadruple bounce for the shares near the 7 pence level, but one would have thought that was enough testing for support. Above 7 pence, looking for 10 pence, and the 200-day moving average area, which has been the block on progress over the last year. So the key here is to not only retest the 200-day line, but then break it on a weekly close basis. Maybe this will be the time now. Just looking at the 50-day moving average, it's actually starting to rise. It's done that before and we failed, but better look there for the 50-day line. Star of the day by quite some margin is Hvivo, which has now delivered a fourth as yet unfilled gap to the upside. I don't think I've ever seen that see that once in a blue moon, let's put it that way. At the moment, the charting position is at above 16 pence. We're looking for 24 pence perhaps as soon as the end of this month. So the unfilled gaps to the upside really flagging a re-rate for the shares, and one has to say, after all the contract wins, it's not a moment too soon. On to Iofina, which is also gapped up today, just going into a golden cross. We've had gaps to the upside over the recent past. They have been filled, but we have had gaps. Another gap today, and we've got a line of resistance from well, I suppose that's from the summer of 2021. That target is as high as 37 pence, and we could see that as soon as the end of next month, especially while we remain above the 200-day line of 23 pence. So looking good there. Mila has been a great, well, was a great performer early last year. Looks like it might be back in business if we can sustain a move through the 50-day moving average at a penny. Above that, looking for old support on the way down around the 2 pence level. Initial resistance line there around 1.6 pence. So maybe that's the place to look for by the end of this month, while we remain above the 50-day line and the 1 pence level. On to one of the stars of last year, which looks like it wants to be a star this year as well, Prospex Energy. Here we got that rising trend channel from September, top of the channel there, now heading towards 19 to 20 pence. In fact, we could probably be a bit more bullish about the whole thing and say that the trend line there, that resistance line projection is heading for 22 pence, but at least 20 pence by the end of this month, and maybe even up to 22 pence by the end of February, but looking for March at least for a decent move towards 22 pence. Upside value while we hold above recent support around 15, so above 15, looking for 22 by the end of this month, or if we have to, going into the early part of March, but looking like we've got a fresh breakout there for prospects at the moment. On to Pressure Technologies, which hasn't been here for quite a while. We've got a rising trend channel there from September. Top of the channel there heading for 60 pence, and while we're above the old January's resistance at 42 pence, looking for 60 pence as soon as the end of this month. Finishing off with Scotgold, and Scotgold here bouncing above that old gap there at 54 pence. View here is that while we're above 54, we could head up towards the low 80s to retest June resistance by the end of next month. That's it for me today. More updates tomorrow.